Oil moving higher today thanks to a combination of factors, including tomorrow's Fed decision, the impact of Hurricane Francine, and a series of blasts across Lebanon. We're joined now by Phil Streible, Blue Line Futures Chief Market Strategist. Phil, always good to have you on the show. So oil moving higher today, Phil. What do you chalk that up to? As we just referenced there, is that growing expectations, Phil, that Jay Powell tomorrow is going to actually do a supersized 50? Is it the rising geopolitical tensions in Lebanon? What do you think?
I think it was. I mean, when you look at crude oil prices rising, it's two things. It's either increased demand or it's decreased supply. So obviously with Libya, with Lebanon, with the hurricane impact, I think that's what drove prices recently. We also had a massive short selling, opportunity in that market, and a lot of people got to come in and cover that. Just a week or two ago, oil prices were really signaling the possibility of a recession. Now, what's interesting is that they are expecting with a 63% chance that the Fed cuts 50 basis points here tomorrow, and many of the commodities and U.S. equities are elevated as a result of that. But I don't know if 50 basis points gives the right type of signal. Does it give the possibility that, we are headed for some darker times like a recession, ahead? And if you look at the 2025, kind of that balance sheet, it doesn't look so optimistic for oil prices. But then again, on the flip side, if we only get 25 basis points, then you could see the dollar index strength, and that could weigh in on not only crude oil prices, but also broad-based commodities such as gold, silver, and copper.
And Phil, so looking out into what we're going to hear from Chair Powell about maybe not just tomorrow, right, but we're going to get the S&P for the rest of the year, maybe make some projections into next year and start pontificating that way. We're looking at maybe 10 cuts over the next 2 years. What should investors be understanding about oil prices in terms of if the Fed is cutting more or the Fed is cutting less, and just simply what that will do to prices likely?
It's definitely the pace at which they cut is one of the most important factors. We do expect that they reach their terminal rate somewhere around next November, right at about 3 to 3.5%. How that can play a role, it could cause, investors to become more optimistic as far as more speculative in the market, and that could cause a broad-based recovery. I still think that many of those hardline factors like we're seeing with geopolitical risks and the supply-demand balance sheet are going to play much more of a bigger role. Also, China is one of the largest consumers, being the second largest economy. If they come out and they start to, follow suit and get a little bit more accommodative with their economy, you could see prices rise on that. So I think down at $65, I think we're a bit too low. I think north of $80, we're a bit too high. And I think it's really a trading affair around there. $75 being about the 200-day moving average right now.
Phil, what does this mean, bottom line, for prices at the pump? Where do you see gas prices headed, near intermediate term?
Yeah, it's been a real interesting dynamic because you go to different parts of the country, we see greatly skewed prices and things like that. If you look at Cushing in the Midwest, we've had 5 straight weeks of declines here. We had another big drawdown here last week. So across the Midwest, we're seeing that kind of impact. If you get back out to the West Coast, when you get closer down to Texas, you have those supply disruptions that are there. So prices are going to remain elevated. I think prices continue to hold firm going forward. And who knows? I mean, that could start to bring back those inflation talks, higher CPI numbers and things like that. So the Fed's really walking a tightrope right now, and no telling how things are going to play out.
Phil, I got to move over to gold because I'm looking at gold futures up over 25% this year. It has been a great year to be holding gold, but I also look at that number and I wonder, can gold really go that much higher from the record high we're looking at right now? How are you evaluating that?
Oh, I really believe so. I think a year-end price target for us is $2,750, and about a 12 to 15-month price target is $3,000. And it's always been that pace of the interest rate cuts that happen. You don't want to see a big interest rate cut if you are a gold investor because of the fact that it gets you closer to that terminal rate faster. You want to see a long, drawn-out process. You want to see a very long journey to get down to that level. So I think gold futures are pricing in 50 basis points. That's why we're at this elevated level. If they only cut 25 basis points, I think we could easily see a pullback down to about 25.50. Kind of your line in the sand on the gold market is down at a 25.20 down to 2,500. If we close below there, it could send off some warning signs that things are going to be a little bit shaky here and there. Who knows? Jerome Powell, he's thrown us some curveballs before where he does one thing and he comes out hawkish on the other ways. And I think with that higher CPI data, it wouldn't put it past me that he's going to be a little bit more firm in his discussion.
Phil, we're talking gold. What about silver? What do you see there?
Silver had a nice recovery with the copper market. That they are really strongly correlated at the moment. 3250 is your key level of resistance. We did break out over that 3054 level, and it kind of puts us in a bit of no man's land. I know some of the coin dealers that I talk to, they expect prices to come back down to about $29, $28. So I would be a little bit more patient from here. I mean, can silver really rally without a strong Chinese economy, because they are one of the largest consumers there? I think that, you need to see them back in the action in order to really get things going. It has been a nice recovery on copper, with copper stocks being drawn down. Again, the correlation between silver's there, but again, without a Chinese recovery, you're going to see silver prices limited in nature.
Real quick, Phil, before I let you go, I got to get your take on copper.
Oh, I am not a believer in copper. I think it's a great hedge on the short side against many of the other metals that you own. So I am in the belief that, China is going to continue to struggle. The demand's not there, and prices are going to trend back down to $4.
All right, Phil Streible, appreciate your insight there.
Thanks.